Hello, you're watching Buy Now, Sell Now on ET Now. My name is Alex Matthew and with me is Cheryl D'Souza. Welcome to you. Over the next 1 hour, we'll take you through the markets. We'll also answer a few of your questions. But for now, let's take a check on where the markets stand at the midpoint of this trading week. It's been a great week so far for the equity markets, particularly in light of what we saw at the end of last week. That torrid session that shaved off quite a bit from both the benchmarks and in fact also the broader markets. We've recouped quite a few of those losses. In fact, if we can pull up a chart that would indicate that a lot of those losses that you saw on Friday have actually been recouped in the first three sessions of the week and also in the session so far. What is also interesting is that volatility has cooled off down by another 5%. I'm talking about the VIX. And with yields retreating globally, you also have foreign institutional investors that are coming back in a big way. So in yesterday's session, you had about 2,000 crore rupees worth of net buying from the foreign institutional investors, and that's always a good sign for the Indian equity markets. Let's look at the benchmarks though. They're up about, well, 1% or so. You have the Nifty that's up about 1% at this point. What is also interesting actually is the fact that Nifty Bank has come back in a big way. So you have the Nifty Bank with most of the constituents gaining in today's session, up about 1.5%. In yesterday's session, it underperformed just a little bit. In fact, through the day, it was a little weak, but it managed to gain ground towards the end of the session to end in the green. Among the other sectoral indices, you also have the metals pack that is doing very well, up another 3% today, because investors seemingly still confident that the economic revival that we're likely to see, and we are seeing, in fact, the world over, is going to keep that sector buzzing. All told, the markets are doing well. The broader markets are outperforming as we've seen over the past few sessions and indeed over the past few weeks. And broadly, Cheryl, the market breadth very clearly after the first couple of hours in favor of the gainers.
Definitely, market breadth looks like it's in favor of the gainers, and I'll take you through the stocks that are there buzzing in today's trading session in the BNSN stock cloud of the day. And first up, let me talk about Engineers India. Yesterday also you saw the counter buzzing, and today also it's buzzing up about 6% in trade. Maybe it's off those highs right now, but the company has bagged orders worth about 600 crore rupees from IOCs. The other stock that is in focus is Aircon. Government has proposed to sell up to 47 million shares of the company at a floor price, which is a discount compared to yesterday's closing price. You have Nalco that is surging in trade, like even Alex mentioned. You had the metal index that's gaining third day in a row. So Nalco is surging. Reports are suggesting that the company has gone ahead and raised some prices of its products. Reliance Industries, Vodafone Idea, both of them in focus today on back of their latest spectrum auction, and the results have come out on that front. Tata Communications surging for one more day, and that is once again, not one more day, once again, because CLSA has come out with a note where they maintain a buy stance on the company. They're saying the growth data services, growing data service offerings, as well as they've included 33% of the land value in the target. So CLSA definitely bullish on Tata Communications. Bank of Baroda is also in focus, and lastly you have SBI Concor NTPC that is also in focus, as Mahesh Nandurkar of Jefferies has come out with a note on the PSU stocks, and he said that he is favoring SBI Concor NTPC, HPCL as well as BEL among those facts. So those are the stocks that are there mentioned in our stock cloud for the day. But taking cues from that note that's come out from Mahesh Nandurkar of Jefferies, who's written a note on PSU stocks, what exactly is he saying in that particular note, and why is he favoring certain set of stocks in the PSU basket? I have Vivek standing by to give us an entire detailed analysis of that report. Vivek?
Well, the flavor of the market is definitely PSU stocks, and today Mahesh Nandurkar of Jefferies has written a very interesting note on the entire PSU basket. The first thing that he is telling is that do not stay underweight as far as PSU stocks are concerned. He says that the PSU stocks has actually emerged as the key beneficiary of the value rally. The government has had a huge role to play in it. They have removed the ETF overhang that existed on these stocks and have also clearly strategized divestment plans as well as privatization of most of the state-owned entities. Remember, the PSU Index has actually outperformed the Nifty by a good 18 basis points over the last 3 months. And what he is saying is that despite this rally, valuations are a good 20% discount to historical averages. And they believe, and Mahesh Nandarkar definitely says that the catch-up trade has still more legs to go. Now, what he is saying is that BPCL, Air India and Shipping Corporation have already received expression of interest from private parties, and this augurs well. Also, when you're talking about valuations, PSUs as a bunch still trade at sub 10 times price to earnings, and they actually offer 4 times the Nifty dividend yield at 3.6%. Their top picks include SBI. They believe that it is the preferred PSU bank as they see normalcy in economic activity, and they believe SBI is well poised to take advantage of that. Their other pick is NTPC with improving ESG focus, capacity addition driven earning growth, as well as operational efficiency improvement. They believe NTPC is poised to do well. HPCL, they believe that valuation, given the fact that the company is well poised to go ahead and give almost a 20% plus cyclical average ROE, and also they expect a 45% PAT CAGR over FY20 to FY23. The other PSU stocks that they like is Concor as well as Bharat Electronics. Bharat Electronics, they believe, can benefit from an increase in order flow from the defense trades that could come in as far as BEL as well as other defense plays are concerned.
All right, thanks Vivek for that view on the PSU basket. But let's stick with the theme, in fact, and talk about it a little bit more. Market veteran Krishna Kumar Karwa says that the privatization push is likely to drive investor interest in PSUs further as operational efficiencies are expected to improve. Here's what he said.
We have seen a massive run-up in many of the PSU stocks. They hold a lot of value. So there we will have to differentiate among the various PSU stocks in various buckets. So some of them which will possibly get privatized, yes, there would be investors who would be looking to invest in anticipation of privatization, or maybe even after that once the deals are concluded. And the others where there is a lot of value, where I think the market is happy to look at value and it is not as narrow as it was maybe a few years ago. And there is a kind of mean reversion happening where markets are willing to give it the fair value or at least closer to fair value than what the markets have been giving. So if you look at PSUs, yes, from a last 3 to 6 month perspective or maybe even a 1 year perspective, they have given good returns. But over a 3 to 5 year period, I think they have still destroyed a lot of wealth. So there's a lot of catch up that these PSUs can do. As far as the public sector banks are concerned, yes, there are some opportunities and there are tailwinds in the sector. It's all about the ability of many of these banks to deliver on credit growth, which is very important. And there could be some opportunities in a few banks which are expected to be privatized in the going next 12 to 24 months.
All right, well, that's a view on PSU stocks. It'll be interesting to hear what our guests have to say about that, but let me introduce them to you. We've got Jay Thakkar, who's the Vice President and Head of Equity Research at MSFL, and also we've got Gaurang Shah, Senior Vice President of Geojit Financial Services, joining us on the phone line. Welcome, gentlemen. Thank you so much for taking the time. Jay, I'll start with you. What is your initial view, very shortly, of course, on how the benchmarks have recouped the losses from Friday, looking quite good at the middle of this trading week? And also, could you take us through your high risk and low risk ideas?
Sure. Very good morning to you. And I would say the way we have seen markets, in fact, bouncing back, it seems that the three-wave corrective rally on the daily chart seems to have got over, and market has found a good support around the levels of 14,500 zone on a closing basis. I would say from here on, Nifty is likely to inch towards 15,200 in the short term. If it manages to take off those levels, we can see more higher levels. In fact, again, a new high, about 15,200. Failing to do so, it can just consolidate within this range of 14,900 to 15,200. Hence, 15,200 is the level to watch out for going forward. As far as Bank Nifty is concerned, that's very critical. In fact, it's attempting to fill its gap on the hourly charts and is expected to fill it completely and in that process, it will inch towards 36,400 on the upside. Now, going forward, 36,400 would be very crucial level to watch out for. If it manages to break off those levels, then we can see 37,000 and beyond levels. Else it can again consolidate within that range of 36,400 on the upside to maybe say 35,500, 600 on the downside. So markets can be range bound, else it can be positive. So my bias will be positive to range bound. Hence, I have two buy recommendation, keeping that view in mind. And one is a low risk idea, one is a medium risk idea. The low risk idea is a buy on HUL. Now, FMCG index itself has corrected quite a lot. And as far as HUL is concerned, it seems to have completed a clear 5-wave declining structure. I see HUL bouncing back to the levels of 2246 to 2275 in the short term. So one can buy this with a stop loss of 2145. If you see, the risk reward is absolutely in favor of the bulls, and it's a very low risk trade. As far as medium risk trade is concerned, I have a buy recommendation on HDFC AMC. Now all this banking financial names are doing good, and AMC, if you see NAM India as well as HDFC AMC, both are doing good, and the trend overall is quite positive. It seems to have completed its short-term correction, so one can buy HDFC AMC targeting 3140 to 3200 in the short term. One can place a stop loss at 2975.
All right, that's the view coming in from Jay this morning, and the stock recommendations that he has a low risk idea, that is HUL, and the medium risk is HDFC AMC. All right, let's get on board Gaurang as well. Good morning, Gaurang. And what are your recommendations for our viewers today?
Thank you, and morning to all of you all. Well, two recommendations, and surprisingly, I think after the correction, we have seen a sizable amount of recovery. And my guess is that over the last 6 months, if you actually go to see, all dips were great buying opportunity. And even in future, if you do get any correction, I think that will also translate into a buying opportunity. And with that perspective in mind, we have two long-term fundamental ideas. First one is SBI cards. Expect the growth trajectory as far as earning is concerned to accelerate on the higher side, with more and more people getting used to the new normal. Target for SBI stands at about 1,250. The second one is from the auto ancillary pack. Swaraj engines, not a very liquid counter, but great fundamentals as far as the earning visibility concerned. And even the corporate management is very, very strong. Over here, the target is about 1,650. Both these, again, are fundamental long-term ideas. So investors need to bear this in mind. And longer the investment period, better would be the returns.
Right, so that's the view coming in from Gaurang as well. All right, Jay, Gaurang, as well as Alex, hang in there. We'll take a break on this edition of Buy Now, Sell Now. And for our viewers, stay tuned. After the break, we'll be coming back with the queries. Don't go anywhere.
Welcome back. You're watching Buy Now, Sell Now, and we're heading into the interesting part for some of you, in fact, especially those of you who have sent in your queries. And the first one, in fact, is coming from Shyam Karani, who has quite an interesting query, I would say, and he's asking about Bearings stocks. And I do understand, Jay, I'm coming to you first on this one, and he's listed out three counters here. He's talked about Timken India, he's talked about SKF, and he's talked about Shiftlaw. And I do understand, I was looking at the volumes for all three of them, and they aren't really very liquid stocks. So I understand if you don't have a very detailed view on the charts, does anything stand out to you though?
Absolutely. See, overall, I'm quite bullish as far as, medium to long-term story is concerned, as far as auto sector is concerned, auto ancillary is concerned. And among these three stocks, I would say technically, if I check, fundamentally these three are really good and can be, one can invest in this. But then, the one which is offering a better risk reward is Shiftlaw. It's having a target of around 5,800 to 6,000 on the upside. It seems to have clearly completed its wave 4 correction on the monthly and quarterly charts. The momentum cycle has reversed now with a positive divergence, and the stock has provided a very good breakout from a short-term double bottom as well on the hourly chart. So I think from here on, from 6 to 9 months perspective, Shiftlaw can be bought, targeting around 5,800 to 6,000. Stop loss can be placed at 4,900.
All right, Gaurav, coming to you, because I think ultimately this is a fundamental query. I think the investor wants to stay for the long term, and he's picked an interesting space to enter, right? Because within the auto pack, you have perhaps a niche play, which is the bearings play. And which of these three would stand out to you, therefore?
Hi, Alex. Morning to you as well. So I will restrict my comments to two stocks, namely SKF as well as Schaeffler. And interestingly, Alex, for bearings company, automobile sector does play a very important role as far as growth is concerned. But along with that, you have industrial demand also coming through for bearings. And these are some core components that go into making any safe vehicle or any industrial use kind of demand that will come through. And fundamentally, we remain absolutely, and not only these bearing stock have a very strong new order book, but along with that, you have equally strong replacement demand as well coming through. And looking at the market share and the growth aspect, long-term earnings perspective, our sense is that Schaeffler and SKF both could turn out to be great wealth creators.
All right. Beg your pardon. All right, then. That's the view coming on the bearing stock. Let's move on and let's get our view on the next query, and that's written from Raghav. He's saying that he's holding 800 shares of Den Network at 64 rupees per share. He's saying that he can hold on to the stock for a year, for one more year. Jay, how are the charts for Den Networks looking like? Is definitely off those 52-week high levels, is trading at around 56 odd rupees. So how does it look on the chart for the next 1 year at least? That's what the time frame our viewer has given to us.
Sure. See, as you rightly said, that stock has corrected quite a lot from the 52-week high levels, and it seems to have completed its 61.8% of its previous move. That's from the March bottom, and 61% is a good enough level, I would say, rather to re-enter if technically the previous move was an impulsive move. So I see this stock having bounced back, or maybe I would say recovered in a 5-wave rising structure that is an impulsive waves. And post that, it has corrected by 61.8%. So it's a good level to enter now. So I would say rather those who are already holding it can continue to do so, placing a stop loss at 35. And my 1 to 2 years target, in fact, would be it's quite an aggressive target, I would say, because these kind of companies, whenever they start their next move on the upside, they are typically very high in momentum. So 128 will be my target. At least for 12 to 24 months, I would rather say, and those who are holding it can continue to do so. And in fact, those who want to enter fresh, they can also do so, as the risk reward is absolutely bullish.
That's the view coming in from Jeff for Den Network. Gaurang, what's your take on this stock? Raghav has bought the stock for about 800 shares of Den Networks at 64 rupees per share. What's your take on Den Network? Fundamentally, more steam left for the company over the next 1 year?
Well, honestly, I think one needs to be very, very careful, in identifying stock and opportunities when it comes to investment. And of course, we don't have any specific coverage on Den Networks, but if you do get rallies and if you are minimizing your losses, I think it is prudent to move into some mid-small private sector banks. That's where we see tremendous amount of growth potential coming through. And if you even have to reflect upon the earnings, then last 3 quarters have been very, very strong for some of the large, mid and small private sector banks. My advice would be that use rallies to switch out of Den Network, and if you do get that opportunity, then I think Federal Bank would be a great investment opportunity.
All right. Interesting view coming in from Gaurang. Federal is his pick. Let's take the next query then. We've got a question coming in from Karthik on Sinjin, and he's bought this share at about 560 per unit. He's asking whether he should hold or sell. Jay, coming to you first on the charts. From what I can see, it's trading below quite a few of its simple moving averages. In fact, it's only trading below its 200, rather above its 200-day moving average, and all the lower ones have been taken out at this stage. So it's not been a very good start to 2021 for this stock, shall we say. It's still around his buy price, though. What should he do at this point?
Absolutely, as you rightly said, 2021 has not been that great for, Sinjin, and, the stock has in fact performed quite well, has provided decent returns in the last calendar year. And now in this calendar year, it started, we have started seeing some good amount of profit booking from the higher levels, and the reversals are also seen in a short to medium term momentum indicators, as well as, the price has also confirmed the same, as we have started to see the low tops, low bottom formation, not only on the daily, but the weekly charts as well. Fundamentally, the stock is good, but then, technically, I think, it can now retrace its entire up move. It can fall till the levels of 475 to 450 levels. So I think one can exit from this stock. In fact, one can switch. So since it's trading somewhere near to the buying price, I would say rather that, one can switch by exiting from Sinjin and entering into Alembic Pharma, APLL. I mean, that's looking really strong, and I think a good amount of correction or consolidation has happened as far as Alembic Pharma is concerned. And from here on, you can see a good momentum on the upside. And both are, mid-cap category stocks. So I would rather bet, or I would rather say that from a trading or, investment point of view, APLL seems to be a better option than Sinjin.
All right, Karthik, that's the view on the charts. At least Jay is advising that you switch out. But let's take a look at the fundamentals as well. Gaurang, Jay mentioned fundamentals look strong. Indeed, the earnings picture seems to be quite okay. The Q3 earnings were more or less in line according to some of the reports that I have read. And the guidance for FY21 revenue is also seemingly to be, well, more in line based on what we've seen so far. What's your view on the stock? Would you also recommend a switch at this point?
I would advise him to hold on to the stock, and despite the fact that he got in at 560, which seems a little bit elevated level, I think there is one more strategy that this investor can put in place, Alex, and that is adding to the stock on dips, maybe closer to 525 or 500 would be a great opportunity. And that will not only increase the investment, but also bring down the cost, which is currently at about 560. And as you rightly mentioned, Alex, strong recovery in the earnings and the opportunity that lies ahead for Sinjin is only going to multiply going forward from here on, and that's going to reflect upon the earning as well. And as far as the commentary or the verbatim from the management is concerned, we remain absolutely, sure, and our confidence has only reinforced our investment long-term call on Sinjin. So stay invested, don't lose patience. If you get dips, maybe closer to 525 or 500, you can average either 50% or 100%.
All right, that's the view coming in from Gaurang on Sinjin. Let's move on. Let's get on board our next query. And this one is from Abhishek Ray. He's saying, what is the outlook for Zee Entertainment? Should I hold or sell the stock? Though the quantum of the stock holding is not given as of now for Abhishek. But on the chart, Jay, how is Zee Entertainment looking? We saw a stellar rally coming in over the last 5 days, about 9% uptick that's come in Zee Entertainment. But how are the charts looking from here on for that particular counter?
Well, absolutely correct. That since a week or so, we have seen a good rally coming in on Zee, and I would say that it has retraced from 38.2% of its entire move from March until, the recent highs, 52-week highs. And it's not seen a good amount of correction, I would rather say. It can consolidate a bit more, I would say, from, within the range of 190 on the downside to maybe, around 240, 245 on the upside. So it's going to be staying range bound, I would say. A fresh momentum or a strong upward journey will resume only above the levels of 260. That is, once it takes off its recent, monthly swing high. I mean, post that we can see a good amount of rally. One can see around 30-35% move from there on. Until and unless that happens, I would say this stock will consolidate within 240-190 range. In fact, from here on, if someone wants to actually trade or find some opportunity as far as media stocks are concerned, then the risk reward is good in Sun TV, which has broken out from an inverse head and shoulders pattern, trading at around 510 right now. The stop loss can be placed at 480. One can buy this targeting around, say, 575 to 600 levels for the short to medium term.
All right, that's the view coming in from Jeff for Zee Entertainment. Gaurang, what's your take on Zee Entertainment? How's the outlook for this particular counter looking like? Seen good set of rally coming in near its 52-week high levels. So how is the outlook looking for going ahead from here for Zee?
So on the fundamental, there were some news flows which did create concern for investors as far as Zee Entertainment is concerned. But over the last 3 to 6 months, I think there has been sizable amount of development on Zee Entertainment, and the negative news flow is abating, and there is some strong positive news coming through. The company has a bouquet of channels to offer, not only at national level but even at regional, channels as far as Zee Entertainment is concerned, and they have a diversified bouquet to offer. Remain extremely positive, but the only problem is that if you have bought the stock at a higher level, then you need to average. And I think for new investment, closer to 200 would be a safe, kind of relatively a better zone to add to the stock or even buy the stock afresh. Targeting somewhere close to about 275 to 280. And if you have a longish time horizon, then the news flows tend to have a positive impact on the earning as well.
All right, that's the view coming in from Gaurang as well for Zee Entertainment. On that note, thank you Gaurang as well as Jeff for joining us, giving us your view on the markets, resolving viewer queries as well as giving some ideas for our viewers. And on that note, we'll slip into a break on this edition of Buy Now, Sell Now. But stay tuned, more news on the other side. Don't go anywhere.
Welcome back. You're watching Buy Now, Sell Now on ET Now. On this side, we'll take you through quite a few of the stories that are making headlines both this morning and over the course of last evening as well. The big story, of course, at this point is the fact that the Telecom spectrum auctions were concluded yesterday. The government mopped up as much as 77,815 crore rupees through the auction of 4G airwaves, and Reliance Jio emerged as the top bidder in that auction, cornering roughly 3/4 of the spectrum that was that was being auctioned. Sunita Nagpal is joining in with all the details. Sunita.
In the telecom spectrum auction, both Bharti and Jio have bid aggressively, and they have bid more than what Street was expecting them to bid for. Street was expecting largely that they will go only for renewal of the spectrum and will not spend this much, but they have bid for additional extra spectrum, largely to improve the quality of services they provide to their subscriber. If you look at Jio has made a bid of 57,000 crore rupees. Out of this, they will have to pay upfront 30% and rest will be paid over the next 16 years. So they are acquiring additional 488 megahertz of spectrum. They have bid in 3 band categories, and they will be able to reduce the congestion on their network substantially. Also, they have improved their spectrum holding by 55%. They will also increase the average life of the spectrum holding by 15 to 15.5 years. That's the kind of benefit Jio will get. In case of Bharti, they have also bid for roughly about 18,700 crore rupees. They have bid for a spectrum of 355 megahertz, which essentially means that their spectrum holding will go up by 37%. And with this spectrum, they will be able to cater to additional 90 million customers, and will also be able to improve their quality of services substantially without very minimal capex. Both Jio and Bharti can use some of the spectrum they have acquired in this auction for launching of their 5G services. No bids coming for 700 and 2500 bands could possibly lead to government reducing the reserve price in the next auction, which is very, very essential for 5G to succeed.
All right, thank you, Sunita, for the details of the telecom auction. You also have, I meant spectrum auction, not telecom auction. Also, you have CLSA that's come out of the view on the entire telecom space. They're saying that the spectrum auction ended with sales of about $10.7 billion. Also, they've given the figures of how much each of the company has actually gone ahead and spent. They're saying Reliance Jio spent about $7.8 billion, significantly ahead of estimates. They said Bharti Airtel has spent $2.6 billion, out of which 50% they've spent for 900 megahertz and 2300 megahertz in order to boost its network. Vodafone Idea's auction spending was only 2,000 crore rupees, significantly less compared to Bharti Airtel as well as Reliance Jio. They're also saying post-auction there is likely to be a crash in spectrum prices. CLSA is also saying the spectrum burden now ahead of Bharti Airtel is what CLSA has to say on the telecom space. So that is why telecom sector is definitely in focus in today's trading session. But apart from that, you also have Asian Paints that is in focus, and there's a note that's come out on Asian Paints. Alex, take us through that.
Absolutely, Cheryl. In fact, if we're looking around us here in Mumbai, at least if I look outside, there's a lot of building activity that's taking place. And I think that's really the theme that a lot of people are building into as well. That, well, the paints, you have the building material space that is really taking off in a big way. And Credit Suisse believes that Asian Paints is going to be an outperformer in this space. It has maintained its outperform rating on the counter with a target of 2,800 per share for Asian Paints. What it's saying is that yes, definitely commodity inflation is going to be a headwind. Crude oil prices, remember, are going to be in focus both today and going into tomorrow when the OPEC meets to decide what the supply curbs would be, if at all, in April, and that would determine crude in the short term. But what they're saying is that that's going to have a limited impact on EBITDA margins, because that price increase that they normally are able to take will take care of any raw material increases that you would have. What they've done is they've cut the FY22-23 EPS ratings by about 5 to 7% to factor in the high commodity inflation. But they've also said that the paint industry as a whole has pricing power because it's essentially because of its elasticity. I'm going to say that again. Apologies, elasticity. They've taken price hikes in the years past, and that hasn't been a problem for them, is what they've said. So again, maintain the outperform rating with a target of 2,800 per share on Asian Paints. Let's also go into another story now. And well, as demand trends change amid the pandemic, we caught up with Dollar Industries Managing Director Vinod Kumar Gupta to understand the innerwear market trends and also how the COVID uncertainty has made people choose viable products within this space. Listen in.
Important trend that we noticed was that the economy segment within the innerwear market continued to do quite well despite COVID-led disruptions. Tell us about the market share gains, the incremental sales that you've seen on the back of this uptick.
Well, innerwear segment is something that individuals, as I said, they cannot do away with. They will have to buy these products. So there has been really a surge in the demand for the products. Of course, there has been a slightly change of mind in between the consumers for buying out the economy range of products rather than going for premium range of products. And this surge in economy range of products is mainly because of three reasons. Number one is the lockdown has forced the consumers to really question within themselves about which one to be buying, which one to be bought, and their shopping habits have really gone changed because of the pandemic situation, because the earnings have also been hit because of the pandemic. So there is a change in terms of their liking and the habit of the purchases. Number two, they were really closely monitoring the brands which are really been responding to the COVID-19 crisis. So that's also very important. And then number three is when you the work is there's an uncertainty within the mind of the consumers. I mean, till what time this pandemic situation is going to continue. They really they have lots of expenditure which they cannot put into abeyance because of the pandemic. Still, they will have to incur those expenses. Earnings, of course, there have been a hit on account of the earnings into their pocket. So ultimately, they were thinking in terms of why not to go for economy range of product rather than premium, because they don't know till what time the entire pandemic situation is going to continue. So ultimately, these all three reasons really contributed to demand for economy range of products.
Hello and welcome back. In fact, I should say to Buy Now, Sell Now. Thanks so much for joining us. Thanks for joining us back. We asked you a short while back on social media the answer to a quiz, and quite a few, in fact, got the right answer. The quiz, in fact, was which credit card provider has the highest market share in India. It's quite a tough question. The options were SBI, HDFC Bank, ICICI Bank, and Citi. And the answer was HDFC Bank. And the winners of the Quiz Champion Award are Vishal Anand, Sangram Mohanty, and Ayush Jha. Congratulations to all of the winners. It wasn't the easiest question to answer, and you got it right.
Alright, and moving on, and it looks like a home loan interest rate war has been unleashed in order to attract more and more home buyers. First, it was SBI who announced its lowest home loan rates, and then came Kotak Mahindra Bank that pipped SBI by slashing the rates to 6.65% right up till March 31st. So are these home loan rates, low home loan rates here to stay? Should you consider refinancing your home loan right now, or shift to the floating of rate from a fixed rate? On the Money Show, we caught up with Gaurav Gupta, who is the founder and CEO of My Loan Care, to get his advice for the home buyers. So listen in.
As things stand today, what one can say with reasonable, with reasonable confidence is that rates aren't going down any further, at least on the home loan side. At what point in time do we actually see rates beginning to inch up is a question that will largely depend on how fast the economic recovery shapes up.
Okay. So, for an existing home loan borrower, somebody who's paying down their EMIs, is this a good point to refinance your loans, considering A, of course, their interest rates are much lower, and B, banks like an SBI are also now charging zero as processing fees?
Yeah, so I think absolutely. Now, when it comes to refinancing, what we would say is that in case there are borrowers who are at a fixed rate of anywhere up to 7.5%, it would probably make sense for them to stay where they are. But for borrowers who are on a floating rate or are paying more than 7.5%, either under floating or under fixed, it does make sense for them to refinance their loans.
All right, on that note, we are out of time on this edition of Buy Now, Sell Now. Markets at noon coming up next, so stay tuned.